No real surprises here, but the question is, was this a hawkish pause? Walk us through it.
Well, just looking at the statement and the commentary, it does look pretty similar to what we had at the last meeting in August. So I think more clues will be given in the governor's press conference, which will be held in about an hour's time, and she will answer journalists' questions about the board meeting, and I'm sure someone will ask her about whether the board considered hiking at today's meeting. And I think that the board will probably say that they did consider that, because judging by the statement, they are still quite cognizant of the upside inflation risks, despite the fact that money markets are pricing the RBA to cut interest rates by the end of this year.
Absolutely fascinating. The RBA also saying our current forecasts do not see inflation returning sustainably to target until 2026. It also adds the latest data does not change the board's assessment at the August meeting that policy is currently restrictive and working broadly as anticipated. So, as that old saying goes, we say it often in Australia, if it's not broken, don't fix it.
Well, the data since the last meeting has basically been in line with the Reserve Bank's forecasts. Inflation is coming down, but it's still too elevated for their liking. The labour market is still clearly holding up extremely well, and we saw the Assistant Governor, Sarah Hunter, recently give a speech about how the RBA thinks that the labour market is still tight. It's not as tight as where it was 2 years ago, but it is still tight. The business indicators have been weakening, but the broad suite of economic activity is still basically tracking in line with the Reserve Bank's own forecast. So from that point of view, it's kind of hard for the Reserve Bank to justify changing its stance right now. Really, the only thing that's changed is that the Federal Reserve has cut rates by a little bit more than economists were expecting, but that rate cut by 50 bits from the Fed was completely in line with money market expectations. So on some measures, it wasn't really too much of a surprise. There is often this thought in Australia that the Reserve Bank should follow exactly what the Fed does, and that's clearly not the case in this cycle. The Fed wasn't the first central bank to cut rates. Already about 40% of other banks had already been cutting interest rates before the Fed. And there have been periods in time where Australia and the US moved in different directions in terms of interest rates. So I think that what's going to happen here is that Australia is just going to lag the Fed in terms of interest rates. We're going to see some rate cuts next year, but I think it will be hard for the Reserve Bank to cut rates before the end of this year.